There we go. Going to fire up the recording for anybody who was not able to make it tonight. And it's wonderful to see you both again. My name is Michael Fortin, and I am the QuickBooks instructor for tonight's session. I'm going to just put my slide up just so you have my email address again in case anybody needs it. But it's always a pleasure to help. If you have questions, please reach out, michaelwfortin@gmail.com. And I have been pleased to be working with SCORE for quite a number of years. I've been an adult educator for 30 years, and 15 of it at least has been on QuickBooks. And QuickBooks Online is primarily I think the platform that most people are using. There's still a few out there using QuickBooks Desktop. So this session is intended to for those who use the QuickBooks Online system. But we have a great agenda for tonight, and not sure we'll use even the whole 2 hours, but I do have plenty of material. Can always fill the time. I've never had problems filling the time, but I didn't want to overload anybody with too much all at once. So we have just a basic overview here of QuickBooks Online. I'm sure you know if you attended last time, but we're talking about the cloud-based version of QuickBooks that you pay a monthly subscription to use the software. It is accessible from any type of device, whether it's a Windows or Mac or your iPhone or Android device or whatever you have. If it's internet-enabled device, you can use QuickBooks Online. And there are 4 basic subscription levels from simple all the way up to advanced. And it's suitable for most types of businesses. And there is even a QuickBooks mobile app to perform many QuickBooks activities. We'll be focused, kind of laser focused. This is more of an intermediate level course, focused on the specific topic of cash flow planning and everything that goes into that. And we will be using a test version of QuickBooks called Test Drive so that we can experiment and use the system without disrupting any of our real information in our real businesses. So tonight's overview is from 6 to 8 o'clock ish. We've got again plenty to talk about, and if we decide that we don't need all the time, then I'm happy to answer questions and talk about other things. But I think I've planned it out. This is the first time doing this course, so it's kind of an estimate on my kind of my guess of how much time we think this will take. But it is cash flow planning with QuickBooks Online. Our objectives for tonight, to ensure first that your data is complete, and we'll talk about exactly what that means, because that really is the foundation of being able to do cash flow planning, is that you need good information. So we'll talk a lot about completeness, accuracy, and making sure that all the information that you have and that you have entered into the system is something you can rely on, because you want to get a good picture of what your business is doing. And then we'll talk about generating several key reports in QuickBooks, you can analyze cash flow with the reporting, but I think more importantly, it's really to run those reports to determine to make sure your information is accurate. So that's a common theme throughout this whole session tonight, is accuracy and how to make sure things are correct and accurate. And then finally, the core of tonight is to be able to use the cash flow planner in QuickBooks Online. So This is the QuickBooks Online test drive. I'm going to take this link here and I'm going to paste it in the chat. We want to make sure that everybody is make sure everybody is using this link to access QuickBooks Online. Some of our classmates in the past have had some trouble with this link because if you are active QuickBooks Online subscribers and if you paste this link into your browser, there have been some that say that QuickBooks kind of forces you to log into your own company. It gets confused by the link because you're a paid subscriber. So if you find that's the case where you use this link and it's asking you to log in and there's no way around it, the quick way around it is to try to open up a different browser and paste the link in your other browser. So if you normally use Chrome, I would suggest using Edge for the link, and it should work fine, or vice versa, or Firefox or some other browser that you don't normally use when you log into QuickBooks, and that should work just fine. Okay, so just some basic ground rules too for tonight is it's meant to be interactive and we have a very small group tonight. So please make sure that you ask questions, that you jump in if you have something that you'd like to talk about. If it's something that's unrelated to what we're discussing, you can feel free to put it in the um, chat, and then I can view questions there as well. Or if for some reason your microphone's not working, you want to type it in, you can. But don't be bashful. Just go ahead and unmute yourself and ask away. And we'd love to talk about QuickBooks. I think all the classes really enjoy hearing from other classmates, and it's truly a learning experience for all of us, me included. I always take away something from each of these sessions. So, all right, so let's kind of dive right in here. I mean, we want to talk about making sure getting all of the information in QuickBooks. There's been past QuickBooks users in these sessions that have indicated that they don't use all of the features of QuickBooks, and that they maybe use just QuickBooks just to do invoicing, but enter their expenses, just pay their bills and don't really enter any of the expense information into QuickBooks, or vice versa. Maybe they don't really do much invoicing, or sales receipts, recording sales, but they'll just use it to keep track of expenses. So the answer to that is really, in order to get a complete picture of your business and to have cash flow have any sort of meaning to the discussion, you really do need to make sure that you're entering all the information into the system. So if you use other third-party software, like if you're a Square user and you have the Square appliance and use that at various shows that you're doing, or if you have a Square register, that Square application will most likely be the host system that keeps track of all of your sales. But all that sales information should make its way into QuickBooks so that everything that's, at least in summary, all of the summary information from Square is in QuickBooks. So you have everything in there. So we're gonna first talk about sales, and this just briefly, that inside of QuickBooks you can create sales receipts and invoices. Those are two ways of getting sales information in. Sales receipts are meant for payment at the time of sale. So it's for cash customers, or you can use them also for third-party processors. Like if you have Square and you get a Square summary report, a Z report out of your Square system, you can take that summary information and enter it as a sales receipt into QuickBooks. There are also, and I don't have any personal experience with this other than a lot of students have used it, is there is an integration available, a third-party app that you can use to connect Square to QuickBooks so that all the information is connected. So if you have questions about that, I wouldn't have too much information on that, just to say that it does exist, because it is outside of Intuit. It's definitely a Square product. So you have sales receipts and then invoices. So if you have customers that are paying at a later point after a sale is made, then those balances are tracked in accounts receivable, and we track them within QuickBooks. And that is the other way in which we get sales information into QuickBooks. So we want to make sure that, both either sales receipts and or invoices are being entered into QuickBooks to get the income side of all of your transactions into the system. That's very, very important. We also look at expenses. We need to pay vendors. So just as important is to look at all the checks that you write, the expenses that you incur, any sort of cash expenses or checks or debit cards, all of those, or bills that you might receive from vendors that will later be paid. All of that information needs to be entered into QuickBooks as well. The four kind of common scenarios are to manually write checks, which means you would type them in to the register in your checkbook register in QuickBooks. You can use the checks window in QuickBooks to actually write checks electronically or print them from the system. You can use the expense form and you can also enter checks in the expense form, but as well as additional types of expenses that you might incur, whether you pay cash or however you pay for them. And then finally, and probably one of the ones that's most overlooked is getting bills entered into QuickBooks and then tracking them in accounts payable. Very important if you're going to do cash flow planning. I've had a number of students that don't use the bill feature, that say, well, as soon as I get a bill, I just simply write a check and pay it, which is fine. But just make sure that you're not getting the bill and like tucking it aside, in a manila folder someplace, and then once a week or a couple times a month or whatever, going into that manila folder and then writing checks out, and then or making online payments and then recording them into QuickBooks, right? Because the whole purpose of having the bill feature is to enter that information into QuickBooks so you know exactly how much you owe other people at any point in time. So if you receive a bill but hold on to it and don't really do anything with it, then that will distort the results of any sort of financial statements out of the business and will not give you accurate cash flow information. So another key piece of that, it is, some may say that it's kind of a waste of time. Why do I enter a bill and then have to go in and pay it? It's like additional steps, but it's really it's very important to have the information in the system. For one, it really doesn't take all that long, and the fact to actually pay the bill, if it's already in there, is actually very quick. So it's not so time consuming that it isn't worth doing. All right, so all right, so I'm just stopping to see if there's any questions in here. Comment about Square and QuickBooks. Go right ahead, jump right in.
Hey, so we actually have chosen a bank account where in the morning I can like log into QuickBooks and then just have it, like kind of update transactions for the last day. It'll go to the bank and like extract all the transactions, and then the Square payments come through as payments for us.
Right.
We don't have to do anything else to them, but just kind of assign kind of a category for them, which generally we call fee for service income for our business. And then um, it's really easy and convenient. And so I found that Square and QuickBooks work very well together. And so does if you can find a bank that where you can have QuickBooks work with the bank or your credit card or anything, then it's super fantastic. I mean, it's very easy.
Yeah, thank you. That is true. And it's de depending on the nature of the business and how you do business, um, it may be a great option, time saver. And actually, the next slide here talks about bank feeds as the other way of kind of getting information into QuickBooks, which does require you to either like sync with a bank account that participates with QuickBooks. If it doesn't, then at least if the bank has the ability to export your financial transactions through a CSV file or some other format, um, you can import that information into QuickBooks. Bank feeds is basically syncing QuickBooks with your bank and credit card providers. It's read-only information, so anything you do in QuickBooks does not get transmitted back to the bank. It's one way from the bank to QuickBooks, and it gives you the ability to match, add, or exclude transactions through that process. And so if you were to go in and enter you have a receipt for a purchase and you enter it into QuickBooks, and then you download the bank transactions from your financial institution, it will recognize that you've already entered it and allow you to match that transaction that you've entered to the bank feed coming in, so you don't get duplications. And um, so it works pretty well. For like with anything, there's always pluses and minuses about electronic banking. But in the most part, I think people who use it really do enjoy it. And it's another way of and just making sure that the information is in QuickBooks. So if you use bank feeds, you just make sure that all of your feeds are up to date, that all of the transactions are downloaded, and all of the transactions are actually posted into your company before you do any cash flow planning, because you want to get a complete picture, um, snapshot of what cash flow looks like. So um, the other piece is you know, to make sure that all of any sort of debit or credit card transactions are entered as well. If you, outside of your banks, if you have credit cards, loan payments, anything that is expected to be an expenditure or income that's not yet been recorded, everything needs to be in QuickBooks. So the if you've had any sort of debit card transactions or yeah, of any kind, any sort of credit card liabilities, anything you've purchased on a credit card, and even if you've not paid it off, if you have like a running balance with the credit card, the liability of that credit card needs to be in QuickBooks so it matches. So whatever you owe the credit card company needs to show as a balance due in QuickBooks as well to track that balance. If you have any outstanding loans, vehicle loans or equipment, fixed asset, mortgages, any sort of liabilities at all that you pay on a regular basis like that, All of those things need to be in QuickBooks so that you have an accurate picture. Any sort of business assets that you have need to be in QuickBooks. So if you have equipment, if you have a tractor, or if you have any sort of machinery or company vehicles or anything of value that you are depreciating over time, assets need to be in QuickBooks, and the balance needs to be accurate. All right, so that kind of leads us to this next point here, is that business versus personal, right? Why is it important to separate business and personal transactions into separate bank accounts? Because many times small businesses will commingle funds, right? And it really is important, though, to separate them and to have separate accounts, a business bank account separate from personal bank accounts. And even though it's your business, and even though you are an extension of that business, treat it as though that business is not yours. Treat it as though it's an entity of itself, in which any transactions need to be conducted between you personally and the business, just like you would any other party. Okay. So why is it important to have separate business and personal transactions? Well, first off, you have clean accounting, right? Because it is difficult to see how your business is doing when the funds are commingled, because everything that's in the business checkbook should match what's in your QuickBooks file. They should be in agreement. Everything should be um, verified, reconciled, and match. So anything that's personal, needs to be categorized as like income to the owner. It has to be done separately. And it's very difficult to reconcile business bank accounts without separating business and personal funds, because reconciling a bank account is a key point in making sure that your accounts are accurate. Um, the reconciliation of bank accounts is coming up here in a moment, but it is something that's done monthly. A business should be doing that every single month. Businesses are taxed separately from personal finances, right? You cannot write off personal expenditures as business expenses. So having separate bank accounts is very, very important, to have business and personal separated. It would simplify any sort of tax audits if you should ever get audited for your business. You would not want to complicate the audit by having a mix of personal and business, because to an auditor, it's all fair game. It's all taxable, unless you can explain why it shouldn't be. So it really does simplify the process if it's clean, right? If all of the business activities kept separate. And it's simply easier if you have an accountant, a bookkeeper, it's easier for them to manage. If you have a tax preparer, much easier for them to manage if you have business and personal items separate. So I know it's a very basic thing, and many of you may already do this anyway, but it does come up quite often. So I wanted to explain the importance of it, and especially in getting accuracy with any sort of reports or cash flow planning that we're going to do. So I mentioned reconciling accounts just to talk about what that is, because many times the students that attend the workshops, when you mention reconciling accounts, I get the sense that not many people do it quite often, but it's a basic process where you compare like all of the transactions in QuickBooks Online against your bank and credit card statements. And you then have the opportunity to identify any mistakes, any errors, and any missing information, and make sure that both of them match. Um, so, bank feeds, if you're using bank feeds and you connect your bank accounts to QuickBooks, it does automate the process. It does help in making sure that all the transactions are in there, but mistakes still can be made. So it's important that the reconciliation take place just as well as it would be if you manually entered everything. You have to make sure that every deposit in the undeposited funds or payments to deposit account, they must match what the bank receives. That can be a problem area sometimes, where if you're not following all of the steps in QuickBooks to record deposits properly, that you end up with funds sitting in undeposited funds and you don't have any money to deposit, and that's a problem. So that reconciling the accounts will ensure that that doesn't happen. So it's important to reconcile for several reasons, but primarily, like, bank feeds can increase accuracy, but they're not perfect. They are not absolutely not perfect. There's still mistakes and errors that can be made. So it is a good idea to reconcile those accounts manually on a monthly basis. And then it's important to note that the undeposited funds payments to deposit account needs to match what you actually deposit into the bank. So that's another key area to pay attention to. All right. So just out of curiosity, I'll turn off my slides here for a second. So how many of you can use the reaction button if you want on the screen, or like a thumbs up or whatever. How many of you do monthly reconciliations of bank accounts? Okay, a couple of you? Couple of you do? Okay, all right. So it's definitely an opportunity to look at it. I'm gonna just briefly show you in QuickBooks itself. I'm gonna go into the test company that I put in the chat, and just demonstrate it real quick, because I don't, if you already know how to use the system, then I don't want to waste time going through it all. But this is the test company for Craig's Design and Landscaping Services that we'll be exploring with tonight a little bit. To do a bank reconciliation, I can go up to the gear menu in the upper right-hand corner and click on it. And then you'll see under the tools column, I'll slide down to reconcile. All right, and this here is like a little kind of a tutorial. I'm just going to click get started, but normally you'd start here. So I pick the account I want to reconcile. I simply look at the ending balance on my bank statement. So every month I get a statement from the bank. So if let's say the balance was $10,000 this month, or I don't know, 20,000. And then I put the date that balance was recorded. So I'll put today's date, start reconciling. It will then list all of the open transactions that I have in QuickBooks, the ones that have not yet been matched up to the bank. So I have payments, and then I have deposits. So if I want to look at just payments, I can click on payments here. And I see all of these payments are open. If I scroll down through, so I would simply put little checks next to all of the items that have cleared. And as I do that, you can see that it shows me up here that how much has been cleared from the reconciliation activity, and it tells me how much the difference is in the balances between QuickBooks versus the bank balance, right? So if I select them all, um, it shows me that I have this $22,000 difference. If I go to now deposits, I do the same thing with all the deposits as well by select them all. You can see in this case the difference is there's 18,000 $800 here difference between the two, which means I have a big problem. But mostly because the statement balance that I entered, that $20,000, was just a guess. And it means that I probably made some sort of a mistake when I entered the balance, or I have something missing from QuickBooks, or the bank made some sort of mistake. So when I have a difference like that, that means that I need to, go through and find where things are no longer aligned, right? For example, maybe I checked off something on this list that really hasn't cleared yet. So I need to take off some of these check marks. Or, maybe there's a transaction that's missing, that the bank shows a transaction that has not yet been entered into QuickBooks. So I, at that point, would need to leave the reconciliation and enter that transaction and then go back and try to continue my reconciliation. And I go through that process as many times as necessary until the difference comes up to zero. So that's the basic premise of the reconciliation. Patience has a question. Go ahead, Patience.
Yes, thank you, Michael. I'm not sure if I may have missed it and you said it, but I was just curious to know as to what actually comes first. Is it reconciling the QuickBook against the bank statements first, and then in looking through it, if there's something missing? I guess my question is what happens next if something is missing and you want to include it? And also, like, is it the checking of QuickBook against the bank statement comes first and then this next process of reconciling, or we're talking about the same thing and I'm just kind of
Oh, well, sure. I'll be happy to kind of clarify it. So, the first step is really to make sure that everything is entered into QuickBooks to the extent that we can, right? So, if you have if you've written a check to somebody, and the check is not yet in QuickBooks, I would enter that check, make sure that check is typed into QuickBooks. If you are using, that's another point about electronic banking, right? If you're using bank feeds, the only time you know about things is when it actually runs through the bank. But if I write out a check for 10 grand and mail it to somebody and they haven't bothered to cash it yet, that's still an outstanding check. I should have that into QuickBooks and not wait until the bank feed catches it, right? That's the danger of relying only on the bank feed. So when it comes to checks in particular, and it can happen with debit transactions too, where you run your card someplace, but because of a weekend or a holiday or because their system was down, it can take sometimes a while for a transaction to clear. So, especially if it's a large transaction, I try to make sure that everything I know about is in QuickBooks before I reconcile anything. Once the bank reconciliation process starts, it really starts with getting the bank statement. That's the first step. I need to have a statement from the bank. So whether they send it to me electronically, where I go in and download it from their website, or whether I get physically mailed to me, once I get that statement, the whole objective is to look at the statement and to compare it to QuickBooks transaction by transaction to make sure that anything on that statement is in QuickBooks. And I want to make sure that there's nothing on the statement that is missing from QuickBooks. I also want to make sure that if I have something in QuickBooks that has not cleared the bank yet, I also want to be concerned about that, because if like in that $10,000 check example, if I wrote that check 6, 7, 8 months ago and it's still not cashed, and I show it outstanding, and the bank doesn't see it, I want to find out what happened, because I mean, after like 6 months, I think that check is probably no good anyway. But I don't want it to come through at some time when I'm not expecting it, and then, I mean, in theory, I should have the money in my account always. Even I've written a check, it's committed to that check. So, but if I'm kind of running the business close to the line, so to speak, and I forget about it, and that I have that $10,000 check out there, and it clears at an inopportune time, I could overdraw the account, or it could bounce, right? So it's 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 a good thing to check both ways, that both QuickBooks has everything I'm expecting, and that on the bank side, it's everything that's in there makes sense. I mean, I've seen examples where I've gone to a vendor and they've charged me twice for things, right? Or I've gone to a vendor and they charge me the incorrect, like too much for a transaction. Or something where I've entered it into QuickBooks in error. I've duplicated it in QuickBooks, or the wrong amount has been processed through, and the amount that I actually wrote out the check for doesn't actually agree with what was processed. Yeah, I've seen all kinds of different flavors of it. So mistakes do happen, and this whole process makes sure that everything is matched up. So with that physical bank statement, whether it's on my screen or in my hands printed, I go through transaction by transaction, and I list and I say, okay, I'm gonna look in. I usually start myself from the statement and look at the first, and I'll do payments first. It doesn't matter which one you start with, but if I look at payments, I look at the very first transaction on the statement, and let's say it's let's say, hold on, make this a little bigger here. All right, so let's say it's a $300 transaction. So the bank shows a $300 payment that's cleared. So if I look and I say, okay, here's a $300 payment here, I make sure it's the same one, because I could have more than one. I make sure it's the one, and if it is, then I put a check mark next to it. And I do that every single time, every single transaction, and make sure that all of these are checked off. And I don't check off anything that's not on the statement. So when I'm done, will have only those transactions that have cleared the bank. These other ones that are in QuickBooks, that have not yet cleared the bank, need to stay there until next month, because it means at some point later they're going to clear, and they should clear. So anyway, I hope that answered that question, but that's generally the process. And when you're done a bank reconciliation, the difference here should be 0. And then you can save it, and then you do that same process every single month, and hopefully you're able to always get to 0. And if you're not, then you need to find out what's wrong. There's either something on the bank statement that doesn't belong there, or it's wrong, or there's something in QuickBooks that doesn't belong. And when you find that item, and sometimes it can be more than one item, right? Multiple items, but you basically look at how much it's off, the difference between the two. So this shows a difference of $15,300, right? Is the difference. So it means that I am over 15,000 because it's a positive number. I'm over $15,000. So, um, if I go back to QuickBooks, and I find, oh, well, look, there's a deposit I forgot to enter into QuickBooks for $15,300, that would make this difference go down to zero. So that's kind of the process there. So hopefully that answers the question. So that's pretty much all about bank reconciliations, but it is important to do them every single month.
Thank you,
But
Michael.
of course,
Yeah. And I just wanted to clarify that I understood it correctly. And so after getting the first step of getting the banking statement, I'm going back to QuickBook to the reconcile section now to kind of go one by one and comparing it.
right.
Is that what it is? Gotcha. Thank you.
Yeah, and do it if you've not done a reconciliation before, do it a month at a time. So don't try to do all the months together. So take 1 month, take the earliest month, the oldest month, start with that and reconcile that, and then put that statement down, pick up the next month's statement and work in chronological order, all the way from the oldest up to the most recent.
Okay. Thank you so much.
Yep, you're very, very welcome. So, appreciate the discussion on that. All right, so talk about reports to ensure accuracy. In particular, we'll look at the balance sheet and the profit and loss statement, because those are a reflection of everything that's going on in your business and will tell you, I'll give you a lot of information and will give you indicators as to whether things are not accurate. Again, this all needs to be done on a regular basis. You should be looking at these reports monthly to make sure that they make sense, get familiar with them, and if you ever do cash flow planning, you want to make sure that these reports are accurate first, because if there's a mistake, then the cash flow won't be accurate. So we'll take this opportunity to kind of look at the two reports, get a sense of what it involves, and how to customize the reports, how to do some basic things with reporting, and kind of determine what they're telling us for information. All right. So and some of these features would like memorizing reports and quick zoom and how to export the information into spreadsheets. We'll briefly look at those. We'll also, I guess, kind of just look at it from the kind of the high level. What does QuickBooks have? What is it that it offers in the area of reporting? So there are custom, like built-in reports in the system, and you can customize them to suit your needs. So it comes with a whole library of these different reports to show you different things about your business. It's all based off the information that you've entered. So it's only as good as the information that's in there, right? But there's 9 different categories of predefined reports that all can be customized. So if you will in a moment look at QuickBooks, and see the different categories that are in there, we're going to be basically looking at the most common reports that most everybody looks at. So they're right at the top and easy to find. And then if you do customize a report, so you make some sort of a change on it, you tweak it a little bit, you add information or filter information in a certain way that helps you really get a good sense of what's happening in your business, you can save all of those settings for that customized report, so that next time you open it, it will remember and open up the report in the same way. So you'll always be able to view the information without having to rebuild it. So that's the beauty of customizing them. Um, it's it's an opportunity too to talk about the balance sheet a little bit, just ever so briefly, because the balance sheet is a very important financial statement to prove the accuracy of a business. So you can see this slide here, and there's a formula on it. It's a very basic formula, but it's the fundamental of accounting. This really is how um, the whole basis of how accounting works, right? You have this assets equals liabilities plus owner's equity formula. And this formula is basically reflected in a balance sheet. So we're going to look at the balance sheet here in a minute. But just to give you the concept of what this formula means, I'm going to just take a second and we'll kind of whiteboard this out. So if we remember, see if I can get this going up and going here. Oh, hold on. Well, it looks like here, we'll just do it this way. If I can draw it, assets equals liabilities plus owner's equity. Okay, so that formula is, if you use maybe a small example here to understand it. So if I had a lemonade stand and I have $100 in my checkbook and I'm just starting the business. So I haven't even sold anything yet. I'm just getting it up and running. And I have that $100 in the bank. That's my assets. So the money in the bank. And then I look at liabilities. Do I owe anybody any money? And I'll say, no, I'm just starting this business. So it's brand new right from the very start. So my liabilities are zero. Then I look to owner's equity. And in this formula, in order for it to be mathematically true, owner's equity would have to be 100, which it is, because 0 plus 100 equals 100 on the other side. So it's basically telling that out of the $100 in assets that I own, because I don't owe any liabilities, that all of those assets really belong to the owner. So my owner's equity equals what my assets are in this case, right? But let's say, to the next example, I found somebody that's willing to let me buy $50 worth of lemonade supplies. Then if I put that into the formula, I still have that $100 in the checkbook because I haven't actually spent any money yet. But I owe now $50 to the Acme Lemonade Supply Company. All right. So my owner's equity now is not 100, but in this case, it's now 50, because even though I have $100 in my checkbook, 50 of it really belongs to the Acme Lemonade Supply Company, which means that they have a claim to it. They have, it belongs to them, even if I haven't given it to them yet. So really, the $100 that I have, I really only have $50 of it left for myself, right? So that's the basic principle of how the accounting equation works. And in a balance sheet, it shows you this relationship between assets, liabilities, and equity. And because you'll notice there's this equal sign here, the report will list assets in one section and then liabilities and owner's equity in another, to make sure that the scale is balanced. So think of this whole thing as kind of like a scale, where assets are over here and liability and owner's equity are over here. So in the report, this will always be in balance. So it ensures the accuracy of the information. If it's not in balance, if the books are, which QuickBooks, by the way, would not allow something to be out of balance, doesn't even allow, it wouldn't allow a transaction to be posted if it would cause any sort of out of balance situation. So that's why the balance sheet is an important financial statement to just kind of confirm that relationship between assets, liabilities, and owner's equity. So I'm going to go into QuickBooks and we're going to look at balance sheet together. So if you've not already done this, and it's a great opportunity to use that link in the chat and to open up the test company and kind of follow along with me. So on the left-hand column, on the left navigation bar in QuickBooks Online, I'm going to hover over Reports, and then I'm going to click on the Reports submenu and open up the Reports Center. All right, and you'll see these 9 categories of reports that we talked about. You see, I have my favorites here at the top, but I have business overview and who owes you, sales and customers. So they're all divided into these different sections. The favorites in this company, the sample company, it's already been tagged as a favorite, is the balance sheet. So I'm going to click on balance sheet and open it. And just with that little bit of knowledge that you've been given just from that example with the lemonade stand, we should be able to get a good understanding of Craig's Design and Landscaping Services, which is this test company. All right, so at the top of the report, I can see assets. Assets come first. So that if you remember the equation, the A was on the left-hand side of the equation. It was A equals, or assets equals. So assets come first. And assets are broken down in different types of assets, but there will be a line that says total assets right here. And it says 23,436.29. And then it shows you what makes up all of those assets, right? So I have all the money in the bank. Both checking and savings. That's $2,000 of it. And then I have my accounts receivable. So all of the money that's owed to me by my customers is considered an asset. So I have $5,281 there. Then I have my inventory, like how much I have in the stock room, products that have not been sold yet. The 2658 there. Okay, and that gives me total current assets. And then I have fixed assets, which are long-term assets. So if I have a truck, or we talked about any sort of equipment, all of that needs to be in QuickBooks. So here I have 13,495 for a truck, right? So when I add the current assets and the fixed assets together, the grand total is 23,436. So to confirm that all looks accurate, right, I would scan through this. And if I know I have a truck and the truck's not on here, then I need to make sure that it gets entered into QuickBooks. Or if I see that I have accounts receivable, it shows me $5,200, but actually my customer already paid me last week and it really should be zero. That means I need to leave the report and record that payment in QuickBooks to make sure that this report is accurate. So that's the kind of thing you would do in checking the accuracy of this. And then if I scroll down to the bottom, I have the liabilities and equity section. So everything on the right of that equation, right, on the right of that equal sign. And I should have all 23,436.29, which I do in the bottom. The grand total of equity and liabilities is that. So, but let's look at liabilities and equity separately because they mean different things. So liabilities, don't forget, is money that I owe other people. So I can look at what my total liabilities are is $4,370, almost $71, right? So out of all the assets that I have, which in order to pay my bills, I pay them out of my assets, right? So which makes sense. I can't pay a bill unless I have money to do that. It is possible, right, to have more liabilities than I do assets. So, like if I'm just starting out and I have a business loan to get me started, I might have liabilities that are much higher than the actual money that I have on hand. So it is possible to have um, negative equity in a business. So we're gonna take a look and see what the situation is for Craig. So I have the 23,436 in assets, and I have liabilities. You can see total current liabilities is 6,100, but look, I have a large long-term liability, which is probably it's a loan, right? I must have gotten a business loan to start my business. So when I add the current liabilities and the long term, I have $31,000 in liabilities. So I owe $31,000. I only have 23,000, which means I have negative equity in this situation. So my total equity is a negative 76.95. So that total equity line. So we can get a sense of how this business is doing. So if this business wanted to go out and borrow more money, the bank is going to ask for the balance sheet and wants to see it, and it will look to see, what are the is there anything concerning about loaning money to this business. So if you saw a negative equity of almost $7,700, would the bank loan you money? And they might not, right? Because basically I owe more to other people than what I own for value. But they may because if they have long time relationship with the bank, there's a lot of factors that go into making these decisions. So, but we can see what kind of shape Craig's is in right now, right? That they have negative equity of 76.95. So I'm sure cash flow planning is going to be something important to them, because if they had positive equity in this and they had no liabilities and lots of equity, which probably is not all that common, really. It's probably common to have some liabilities, but if they had no liabilities and tons of equity in the business, then they might not be so concerned about cash flow planning. But because equity is negative and I'm sure things are tight, I'm sure they're going to be concerned with making sure they have cash flow. In other words, make sure they have money in the bank to be able to pay their bills and operate the business. So that's why balance sheet is very important, to look at it ahead of cash flow planning and make sure that it looks okay, to understand what it's telling us. Some different things about this report, and just all reports in general, is that you can customize and make changes to it. We're going to actually practice our customization on the P&L report, but you can see that at the very top, if I scroll all the way, there's some options here. There's some things I can change in the report. There's a customize button. There's a save button to save the customizations, right? And just to say, when we go to the profit and loss report and look at it, you'll see these same kind of features at the top. So it's common to all reports, that we can customize and filter and make changes. So that's a great segue to jump into the profit and loss report and take a look at it. So I'm going to click this arrow here. It says back to the reports, and then slide down just a little bit, and it's right at the top, though, under the favorites area is profit and loss, and open the profit and loss report. And the profit and loss report is showing you the differences between income and expenses, right? So how much money have I earned in the time period that I'm looking at? So here, the time period is January 1st through today, March 27th. So what is my income, like how much have I brought in for money. So I have my total income, all right, and then and cost of goods sold, and shows me what my gross profit is. And then I subtract out all my expenses, and then I can see how much money I have left over. How much money have I made? So in this case, $1,438 is how much I've made, which will ultimately increase my owner's equity because it gives me my assets. That net income increases owner's equity. So the more money I make, the more net income I have, the more my equity goes up, because the more my assets go up. So it's a beautiful thing to make money. So we're gonna just take a look though at the report itself, just the mechanics of it. So in all of these categories, there's little triangles to the left that allows us to collapse and expand these categories. So if I wanted to get summary information very quickly, I can just click on these triangles to open or close them. And if I wanted to look at any of these particular numbers in more detail to say, well, geez, I see that I have discounts given of $89.50. Well, what are these discounts, right? So if I click on that number, it will open up a sub-report to show me exactly where that number came from. So a listing of all of the transactions that total the $89.70, and there's three here. Okay, that apparently I gave a $30 discount here, $8.75 here, $50.25 there, and that all totals the $89.50. So that tells you where it comes from. And if I say, geez, well, why did I give $50 discount on this transaction for Paulson Medical Supplies? I could actually click on the figure, and it will bring me directly to that transaction. Just takes a second to refresh itself here. Click on it. And there it is. So, the numbers behind these reports, or what's called the quick zoom feature or the drill down feature of reports, really allows me to go from the highest level of detail to the lowest level of detail just by clicking through and following the transactions. So it's, managing reports and using reports is a very powerful way of analyzing how your business is doing. So I'm done looking at it, so I'll click close, and then I'll just click this back arrow to go back to the summary report. And that's one of the great features of using the drill down features. You can do these with all of the information on this report. So I can filter it and sort it different ways. Like, for example, if I wanted to click the customize button up here, I scroll all the way to the top and click customize, and I want to change anything about it. Like if I want to change the time period of the report, or if I want to say, let me show any negative numbers in red. And I'd like to see negative numbers with parentheses around them instead of a minus sign. And maybe I'd like to filter the report and say, I only want to see profit and loss for one customer. A specific, actually, go down here. Click here, and I'll say, I only want to see it for Bill's Windsurf Shop, for example, that one customer. I'll run it. Now I can see just for that one customer how much money I made from that one customer. So $85 off that one customer. So you can customize and do a lot of different things with these. Yeah, I'm going to turn that off. Run the report. So now I have I've left the negative as red in parentheses. Okay. Now let's say that I like the report just the way it is. I can save this customization by clicking on the Save Customization button at the very top. And I can name this. So I'll say profit and loss. I'll put my initials here. And I'll save it. Okay, so that report is now saved that way. Right, so if I go back to reports in the reports center, left navigation bar, and hover over reports and then click the reports submenu. And if I go to the custom reports tab along the top, I can see that report that I customized and saved. And then I can click on it and open it. And it will open that report up fresh with real-time information, and it remembers all of those settings. You can see the negative is still in red and the parentheses are still there, right? So one other feature to make sure that we talk about is exporting this information into Excel. So if we want to further analyze it and manipulate it outside of the, what's available within Excel, I can export it. And there's some buttons like right at the top of the report. So I can email the report, I can print it out, or I can export it. There's a little export button. Like, for example, if I want to export it to an Excel spreadsheet, I can click that button. And of course, I have to have the Excel program in order to be able to do that. But it will then export it, which it is done. Now I can click and open it. And it's going to open it up in Excel. Once it does, once it opens here, I'll show it to you. All right, there it is. So I'll share my screen and look at the Excel file, right? So there is my profit and loss that I exported. I noticed it's all zeros too. I don't it's interesting, it's all zeros because the original isn't zeros. But anyway, that is the report itself. And the thing is, anything that it sends to me in the report, and this I will have to kind of look at it, see if I missed a step some here to have all these come out in zeros, because I wasn't expecting that. But normally you'd have all these same figures that are in that other report. And it would allow me to then, like, if I wanted to do any formulas, like add different cells together. Let's say I wanted to add just those three, right? I could oh, there it is. Oh, it's because it was disabled. Okay. I didn't know that did that. So, all right. So I've highlighted now, like, say these three cells, and I want to get a total. I can go over here and click the sum button, right? And I can create a formula to then total just those three. And you can do all kinds of things, right? You manipulate the data however you want, filter it and sort it inside of Excel. So, here, I'm going to go ahead and go back to QuickBooks. But it does, kind of demonstrate the flexibility you have within QuickBooks. Is so much that you can do with it. So, so I'll stop. Any questions about the reporting? Probably, there's a lot of information here. Probably some of you have been into the reports and have seen and experimented with this already, but in case you haven't, again, a very important part of any sort of cash flow planning is to make sure that you take a look at these two reports in particular, the profit and loss and the balance sheet and make sure that they look correct, the information makes sense, right? If you look at this report and it's showing that you have net income of only $1,400, you're expecting it to be much higher, then you can investigate and find out why the report is not stating it correctly and fix that before you do any sort of planning with your business. So, any questions?
No, but that was really helpful. I got to look at some of my reports and I found it useful, and so I followed along. Thank you.
Oh, great. I'm glad that you find it useful. Yeah, don't I don't want to have anybody be like uneasy or afraid to ask a question. No matter what it is, please let me know, and or any comments, anything you might have. So I appreciate that. All right, so we're ready now to kind of slide over into the core of the evening is cash flow planning. One thing we're going to look at first is a clip. There is a video within QuickBooks itself. So if cash flow planning is something that's new and you've not used this feature, they do have right on the desktop a video. So I thought I would play that for everybody and we would start with it. It's only a couple minutes long. But when you first get to the dashboards, here I'll go to home. And by the way, the cash flow planning feature is not available on the lower versions of QuickBooks. So you need to have, the plus or advanced subscription in order to be able to have access to this. But you'll see a tab along the top, the Home tab, and then the Planner tab. So where it says Planner is where we will access the cash flow features. So I will click on it. It's going to take a second. Once we open it, you will see that there's a kind of a tutorial section, especially if it's a new feature. It has a little video to see how it works video. It's actually in YouTube. So and I've put the YouTube link in my slide deck so I could just get right to it easily. So here, I'm going to go ahead and play this video. You should be able to see it and hear it. So can everybody see the video? It says how to use the cash flow planner. Everybody see that on your screen?
Yes.
Okay, fantastic. If you can't hear it, let me know, but I have shared my sound, so I'm going to go ahead and fire this up.
Hi, this is Dan from the QuickBooks team. The Cash Flow Planner uses your QuickBooks data to help you plan your future cash flow. Let's go over what this tool does and how to use it to get a complete picture of your cash flow so that you can make informed decisions about spending and bringing money in. Let's start by looking at the tool. Select Dashboards, then Planner. You'll see what your cash flow has looked like in the past over here. This historical view is based on the total cash that has flowed in and out of your connected bank accounts, including your QuickBooks checking account. You can view either your cash balance or your money in and out. You can also change the time period. And if you go back to the cash flow dashboard, you'll notice that you have access to the same historical view of your cash flow. Let's go back to the planner and go over the true power of this tool. Over here is where the fun starts. You can see what your cash flow is projected to be in the future. The planner bases this projection on your QuickBooks data, like future invoices, bills, and expenses. So the more data you have in QuickBooks, the better this projection will be. Down here you can see all the items that are included in this projection. You'll see any future invoices and expenses that you've already entered into QuickBooks. You can edit any of these items to see what they do to your future cash flow. You can also change your projection by adding a future item, like buying a new truck. Select Add Item. Then enter the date of the item, a description, the amount, and whether it is money coming in or money going out. Once you are finished, select Save. Now you can see that your cash flow projection has changed. If you see an issue like a red dip, make some changes to your future items and get yourself back on track. These items are just for planning purposes and don't affect your books, so feel free to try out lots of scenarios. That's it. Now you can start using your cash flow planner to see where your cash flow is headed.
Okay, so we're going to I'm going to try to use this together here. So within QuickBooks itself,
This is Emma from the QuickBooks team. Envelopes in QuickBooks Checking makes it easy.
all right, there we go. So let's go ahead and look at the planner. If you use the test link I gave you, you'll be able to see it on your own screens. So I use the left navigation bar to select dashboards. And I just went to the home screen to start with. But you'll see on the dashboard menu, there's also an ability, right, to go to the planner directly from here. But if you're at the dashboard, there's two tabs on the top of the screen. So you just click the planner tab at the top. And then it brings you to what you can see on my screen. So I'm going to click the Start Planning button. Now, something to remember is that since we're using this test company, the information that anything we do in here will be deleted and restored back to normal once we close the browser. So if you do all kinds of fancy cash flow projections in here for this company Craig's landscaping and then close the browser and reopen it, you'll lose all of that work and it will start fresh because it is just a test company. So just wanted to remind you of that. So we're going to look at just kind of the layout of this. So at the top of the screen, so it has today's cash balance. So it shows me that I'm in a negative cash flow situation. And if I scroll the screen down here, this has all of the upcoming transactions that QuickBooks knows about. So in other words, I have customers that owe me money from work that I've done for them, and I've invoiced them. So it projects when I'm going to get paid for those things based on the due date of those invoices, right? So if I have Travis Walden, for example, owes me $414 tomorrow, but I know that there's no way Travis is going to pay me tomorrow. I can go ahead and adjust this in my cash flow. If I wanted to go to the transaction itself, there's this little arrow. It says see the nested transaction. It will bring me right to that transaction. But if I know that this 3/28 date is not correct, I can click on it and I can adjust it to say, you know what, I'm actually not going to get paid until April 13th. I can change that and update it, and it will then adjust the cash flow projection based on that. Okay, because this is all based off, if you have any economists out there who's ever had all things being equal, right? That's kind of the mantra of economics, but all things being equal, this is what it should look like. So if there are no other factors that influence it, you can see now my cash flow balance 3422 will reflect any sort of change that I made to when I'm getting paid. And it will affect the timing on the graph here too. All right. So that's just an example of the different things I can do is to make these adjustments. And there's like 11 items. There's a couple of pages here of these. It includes both bills, so expenses that I have, as well as money coming in. So that's why it's important to make sure that all of the cash flow planning is all of the QuickBooks reconciliations, all the transactions that I know about, any sort of long-term loan payments, like anything that I have should be in QuickBooks in order to make this accurate, because otherwise it doesn't have all the information. Okay, so yeah, I gotta go ahead and kind of break this down into different slides here, kind of step by step, and this will help us kind of walk through and think about all the things we need to do in order to set up cash flow on our own companies. So this is how we set up the planner. Now remember that the cash flow planner does not affect your actual finances. So it's a sandbox you can play in. You can, make predictions, adjustments, but doesn't actually change the real transactions in the system. So, also the cash flow planner isn't available in QuickBooks Online Accountant, and if you turned on the multi-currency feature. So first thing is to set up your account. You would need, if connect your bank and credit card accounts. That way, all of the information from those accounts will be in QuickBooks. So that's important. You can then add items. So you can manually add items for potential income and expenses. So let's say that if we go back into QuickBooks, go jump over here. And if we look at our income and expense items, let's make sure at the top. These have like all of my bills and invoices. Let's say I notice that I'm expecting a $10,000 like loan to be paid out, so that I'll have another $10,000 coming in. I can go in where it says add item, and I can say, let's say I'm going to go to the bank on Friday. So on the 29th, I'm going to get my business loan proceeds, 10,000. And this is money in. And I click save. And now adds that to the list, right, of this planned activity. So my today's cash flow plan, isn't changed much, but if I look out at the chart right here, you can see I was in the red. All of a sudden I'm in the green over here. Look, I have all kinds of extra money now. Right. So that definitely helped my situation, the 10,000. So when you add item, you can add items for whatever you want. And it would be the same thing with expenses, right? So if I currently don't have all of my loans in here, to say, listen, I also pay $1,000 a month for a truck, and those truck payments I haven't entered them into QuickBooks yet, and I need to do that. I can click on add item, and let's say it's the first of every month. I'll say on April 1st, it's my truck payment, $1,000, and this is money out, and it repeats itself monthly on the first day of the month, and there's no end to it. At least there is hopefully an end, but I'll say there isn't. I'll click save. All right. So now if I look ahead in my schedule, I'll see here, let's go to the next page. There's all my $1,000 truck payments coming out every single month right there. Right. So if I look at the chart, it's reflected now in there. Of course, I'm still in the green, but you'll see my balance is $1,000 lower than it was earlier. Okay. And over time, eventually, because if I look out way into the future, this is 12 months. If I go 24 months into the future, eventually I'm going to go down to nothing, because that positive money I had goes down and down, and I don't have any income to offset it. So eventually it's going to use up all the money I have until I go negative. Okay. So that's how that's working. All right, let me go back over to the slide. So, so this is where I manually add items for potential income and expenses, which I've done, and I clicked add item and then indicated whether it was money in or money out. And then I give the item a name, and then I can indicate whether it's recurring, and which I've done. And then when I'm done, I can export all this information, which I'll show you in a minute. And I can easily edit or delete items if I need to do that, right? So, for example, if I go back now into the QuickBooks, and we'll say that truck payment really, should be something different, right? So I can click on it and say, really, it should have been $1,500 and not 1,000. And I update it. Do I want to edit just that one item or the entire series? Let's say the entire series. So now it's reflected. You can see now how my cash flow is dramatically, the picture is looking not as good as it was before, which makes sense, right? So easy to add up the items that I've entered in. And as a reminder, of course, any of these changes that I'm making do not affect my actual company, right? So so it's easy to make the changes. If I want to remove an item, like I can just simply click on the item I want to remove and then use the remove feature, and then I can have the option to either remove a single instance of something or the entire series. So it's really, really easy to manage them. And then if I want to select, like change the preferences in the planner to select the information that is being fed into the planner, then I can use the gear icon. So let me go back in here. You'll see this little gear icon on the upper right hand corner. And I give some choices, right? Do you want to get my balances from checking, savings, or both, or I can link additional accounts? I can even use a threshold if I want. So there are some things I can do to modify this planner to make sure it's more accurate. And I can view the information different ways. So if I want to see money in and out, I can see the chart. So I can see this huge spike because that's where I get the $10,000 loan, right? But here, these are just expenses, all money out. And there's no income coming in there. Okay, so that's another way of looking at it. I can look at either the cash balance or as money comes in and out. So some different things here that we can use to help us get the most accurate picture. Okay, and then the threshold section, as I showed you, is you can keep a cash buffer of a certain amount on hand that will appear in the chart if you would like to do that. All right. All right, so we'll go back to QuickBooks. All right, and then, once I get the cash flow kind of the way I want it, and if I want to be able to export this information, you'll see there's a feature on here that says download the report. So it allows me to use the drop down. I can export it into a spreadsheet or as a PDF report. So let's say I export it as PDF. Let's take a look, and this is really probably the best. I think it's the best way of kind of viewing the results of my cash flow planning work. Yeah. Let's open it. Okay, so hopefully you can see. Can you see the PDF okay? Let me know if you can. You should be able to. So this is the printed copy of it. I can see the graph that was on the chart, but it also gives me a month by month breakdown of money in, money out, and then the ending balance, which I find it very, very helpful, right? So as I have that $10,000 loan coming in really gave me a boost here, right? But each month, I have expenses and no income, so eventually I'll run out of money and then start going negative in October, and then it continues on. Future. So, I think that the cash flow report out of the planner is very, very helpful. All right, I'm going to pause. Any questions from anybody? Give you a chance to find your mute button in case anybody has a question. Anybody like it? What do you think? Think it's a helpful tool? Anybody not like it?
I can say that for our business, it's so hard to project what's coming in. We are a fee-for-service business, but we've been in business like with employees for like more than 10 years. And so we kind of know what to expect from, medical insurances and things. There's a delay when we do billing and things. And so, but it's really these forms. I was able to participate in a Goldman Sachs 10,000 Small Businesses program. It's like a mini MBA program for like one semester. And they really emphasized balancing, reconciling these things, keeping up with QuickBooks and really looking at cash flows, balance sheets. And it really, for some business people and entrepreneurs, that we might be able to need to use these in the future in order to sell our businesses or value our businesses and other things. So these are really helpful tools. Thank you very much.
Yeah, I understand. Well, and so in your line of work, you've been in business for quite a long time. So you probably know at least, you can project at least the minimum amount of income you might expect in a given month, at least. Like,
right. Yeah.
You might not know, if you have a $100,000 month next month, but you could say, well, but I always get 20 or I always get 30 or whatever it is.
Mhm.
You can always bank on a certain amount. And then
Right.
And then look at the expenses coming up to say, well, what is unusual is I had to repair my office, or I had to, right? And then you
Yes.
look at the impact of those things. So I think, to your point about the class that you took, right? And
Yeah.
making sure you reconcile, you could have a very successful business, but you have no cash, right? That you're
Right.
completely, you have lots of business, lots of people, customers, but if they're not paying you at the right times when your expenses demand you to expend money, then you're cash starved. So that is kind of the point of this exercise, is to try to project when those times will happen, if it's possible.
Yeah, very true. And actually, recently we've had a couple of incidents where Harvard Pilgrim locally, this was last year, actually got hacked and they stopped paying us for about 4 months. But meanwhile, we were paying the providers who were seeing these people who have Harvard Pilgrim insurance. And so I'm just waiting to eventually get paid when they would finally trickle in. And
Yeah.
this year was the Change Healthcare got hacked. And so our billing company had to drop all of the claims that they normally submit electronically to paper claims. And so there's a 30-day backlog for many insurances for processing our claims. So again, we have to make sure that we have enough cash in order to pay the employees so that we can stay in business. So we've learned to keep extra cash around for
Yeah.
those reasons. Yeah.
Yeah.
Emergency.
Yeah, that's
Crazy.
that yeah, boy, it sounds crazy.
Yeah.
Yeah. Thank you. That's a great example. Great example. Thank you, and I'm glad you appreciate you sharing. So, anybody else? What are your thoughts on this? Any questions? Anybody think they would never use it? Which is okay.
No, this has been very helpful, Michael. Thank you so much, especially going over the reconciliation and also kind of the accounting equation, just to give a sense of how that works. At least for our business, that has been helpful to me because there are some things that I could do in QuickBooks in terms of the bookkeeping instead of just, um, depending on I don't know, an accountant or something to do it. Of course, there's a need for it, but there are some things that I could easily do as well. And so I appreciate that. This has been very, very helpful. Thank you.
Oh, my pleasure. Thank
Hello,
you.
can you hear me?
I can hear you.
So
Oh,
yeah, cash is very helpful to have the cash to run payroll. I just got a contract with a new customer, and the way that I prepare for the cash is that the new customer is gonna pay me in advance 1 month,
yep.
so that I can have the cash to pay the new employees, full-time new employees for that month.
Yep.
So I really appreciate that the customer was willing to uh, uh, pay a 1 month in advance deposit, because otherwise I would be sweating to
Oh,
come
yeah.
up with that cash for a month and a half.
Yeah. That's a great example. I mean, in that case, you could, if you decided to use the cash flow planner, you could add that as an item in here that, you had this amount of money that was prepaid and given to you. And then you have the expense of this employee. Now, if that naturally for a given month, right, you'll be kind of in the green on the chart, um, until eventually, if that customer stopped paying you, right, you may end up in the red section. So it's good to project out like how long could I continue to pay this employee until I'd run into a difficult situation? So that might be another way something like this could be useful. But yeah, there are many types of businesses that really rely on getting customer payments in advance, especially think about contractors who if they're building something for you, they usually do ask for some sort of a deposit down to be able to buy the materials and pay for their staff, pay for their workers in order to be able to finish the project. And so they're incentivized to get it done so that they can collect the balance at the end, because you're not going to pay them if it's not done. So it's those types of businesses, cash flow planning is everything, because you might even rely on relationships with your vendors, right? If I'm a contractor, I need to set up accounts with my electrical suppliers and my plumbing suppliers and building materials so that if they will give me like 30-day terms so I can pick up materials on account, go do the work, get paid by the customer, and then pay them off so that I'm not having to front the money for all of those purchases. So that's where it becomes really important to have all of the information in QuickBooks so I can see how much money I owe my vendors, how much money that is due to me from my customers, and be able to then use like the cash flow planning tool to make sure that I have cash to continue to operate, and my overhead expenses like my insurances and my vehicles and my office expenses and internet and all those other things are still requirements for my business, whether my customer pays me or not. So it's an important factor. So great. I thank you for sharing that. So a lot of you, please jump in if you have any. We're getting close to the end of our time. The report that we generated out of the cash flow planner is about the best way really to see the result of cash flow planning. But I did want to point out that there is a cash flow report. If you go to the left navigation bar under reports and click on the reports center and open it. And if you scroll down just a bit here, we will see, we'll go to the standard tab here and scroll down a bit under business overview section, which is near the top. You will see the statement of cash flows. And we can open that here briefly and look at it. The statement of cash flows report is not based on the projections that we have made in the planner. It is based on the actual posted transactions in our real company, right? So it looks at the income I've received, and receivables and the money that's expected, as well as the outflow of cash, and gives us what it expects to be the cash at the end of a given period. So statement of cash flows is kind of the traditional report. If you don't have the planner feature in QuickBooks, the statement of cash flows does not give you projections, but it's based off of the actual bills and receivables that are actually in your company at that time. Does not take into account any of these planning tools like the ability to add other items and projected income and expenses that are not yet in QuickBooks. So anyway, so that is the kind of the final item that I wanted to show you tonight. So what questions does anybody have? I'd like to make sure that Any questions that you might have are brought out so we can talk about it. We have a little bit of time left, about 12 minutes left.
Just curious to know, Michael, if will there be other trainings on QuickBooks that you have planned to offer in the near future, and what will those be in terms of topics to get a sense?
Yeah. Well, what we typically, I have one more that's coming up. It is actually, the focus of the class is QuickBooks for farms, for agricultural type businesses. It is through the University of Maine Cooperative Extension, and it's a partnership between SCORE and the University of Maine, and they offer sessions as well. And there's one coming up in April. So if you have that type of business, and if you think you might be interested in it, you can you can find it on the University of Maine Cooperative Extension website. And I'm not sure about the SCORE training website, but there is the focus of that class is to look at how to record assets, how to record depreciation, loan payments, long-term liabilities, and doing journal entries and things like that. So it's another intermediate type course that gives us um, another peek into some of the different functions of QuickBooks. So that is a new topic that we've not done in the QuickBooks Online format before. So that's up and coming. We typically have several times a year, and I don't know if we'll have anything over in the rest of this spring. I will present the courses as SCORE sets them up, but they have oftentimes not too much during the summer, but anywhere from like September through May, let's say, time frame, sprinkled various workshops. We've done in the past a 4-night introduction to QuickBooks Online, which it's QuickBooks in of itself is about takes about 15 weeks or 45 hours of instruction if you wanted to go through the entire application. There's a lot of functions and features in the software, so it's quite a bit to it. And but a lot of you are very, very busy and just don't have that kind of time to invest in learning it. So we understand that, and we do a number of shorter, easy to kind of bite off workshops. Like tonight, we just carve out a couple of hours and talk about a particular topic, and then try to present the material, just in easy to digest pieces. So we have the 4-night one is the longest one that we typically do. But we did a 1-night overview. We've done class tracking and expenses workshop, and we've done now the next one coming up again is that workshop on recording liabilities and loans. And then the cash flow, tonight's cash flow, is the very first time we've done this. So we are experimenting, and always though willing to take feedback. If there's some particular topic you feel would be very helpful to have a workshop on, or at least maybe one piece of a workshop, let us know about that. You can email me those if you want, and I can send them to SCORE, or you can communicate with SCORE directly. I'm sure you received like a confirmation email from SCORE when you registered for tonight. So there should be a way of using that email to connect with SCORE directly. And please let us know, because we'd be happy to design anything that you would find useful. So, and then check on the SCORE website. All of the training resources are listed there. And we used to do these in person in an actual classroom in Portland and different places throughout the state. But since the pandemic, it's changed how we present. Everything's been done virtually, and so we really have a statewide program. Anywhere you are, in the world, right? You could register and attend these courses, so makes it really convenient. And we have a lot of flexibility now to offer different topics at different times. And so please let us know if there's something else you'd like to see, and stay tuned for upcoming sessions. The only one I know about is the April one coming up for farms, but I'm sure there will be others in the near future. I'm sure they will continue to schedule them. Any other questions that anybody might have? And it doesn't necessarily have to be about cash flow planning. It could be about something else. Anything you want to talk about in QuickBooks? Give you just another second to find your mute button in case you want to, or if you're typing it in. I see,
All right, I'll say something else.
go ahead.
So, our business is based in Massachusetts, and there are a couple of things about it. If you ever want to do your own taxes, QuickBooks makes it easier to do that. In Massachusetts, though, for the state tax filing, you have to make sure that the balance sheet balances. And sometimes if you use Intuit's other product like TurboTax, which I've done this year, you still have to kind of enter something else manually. It doesn't seem to work seamlessly. However, if you have everything up to date in QuickBooks, it is so much easier to have everything work right and to have your taxes done and not be behind the 8 ball. And as we all know, business taxes are due a month before personal taxes are due. And so it's a lot to do for a business owner. So QuickBooks has really made it easier for us to keep doing what we do for work and just have the books be okay. But it's a lot. It is a lot.
Yeah, it is. That's
my
great.
comment. Yeah.
Thank you. You should, anytime you want to drop in and give us advice, I'd love the class to hear it.
Actually, I went to I pick up little bits at any time I go to a training, and one business owner said, and this was really interesting. I think it might be helpful that having a debit card instead of a credit card for your business would create zero liabilities, because when you pay with a debit card, it automatically comes out. And so there's no carryover of a liability at that point. So it's almost like real-time accounting, and can make it easier for when you balance things at the end of a year, or if you're doing that, it's really that, how you had that assets equals liabilities plus owner equity, that's kind of statement gets confusing for some people.
Yeah. I know there's businesses that won't write checks because they want real-time accounting. They don't want to wait.
Yeah.
And they want to really rely on the bank processing things quickly, and so they get real time. Yeah, that's a good point too.
Very interesting. Yep.
Yeah.
Great. Hope it's helpful.
Hey, thank you. I
Yeah,
appreciate
thank you very much. Yeah.
Thank you. So I just want to thank all of you. I don't have anything else tonight, but if you have a question, I'm happy to stay and answer something. But otherwise, just thank you for coming. It was great to meet all of you. We had a small class, but small and mighty though. We had some great discussion and really got some great things out of it. So I appreciate you joining us, and please stay tuned for other trainings. I'd love to be able to work with you again. So with that
Thank
being,
you, Michael.
thank you all, and I hope you have a
Thank
wonderful.
you very much.
Thank you. Have a good night, everyone. Thank you so
Yeah.
much again, Michael.
Of course, thank you.
Bye-bye.